All right, so today we're looking at a very important topic in trading, which is called psychological level. The title says Trade Smarter, Not Harder. Discover the power of psychological level in trading. All right, so what are psychological level? We say that psychological levels rather, often referred to as psych levels, are specific price levels in the forex market that are not only significant from a technical standpoint, but also hold considerable psychological importance. These levels are typically around numbers or price points that traders, big banks, and investors pay close attention to because price often reverses at this point. Common psychological levels include all numbers like 1.1000, 1.2000, and 1.5000. Now, let me just explain. Basically, what this is saying is this. In trading, there are some tips that makes you outstanding, and this is one of them. Psychological level are all numbers, are round figures that big organizations like banks, investment firms, they look at because price react at this level. For example, about 2 years ago, our exchange rate in Nigeria got to 2,000 naira per dollar. Now, if you can just get a flashback, 2,000 is a round figure. It's a whole number. And that was the first time ever that our exchange rate would get to that level. What happened when it got to 2,000 naira per dollar? It fell down to 1,100. So that was a psychological level. I remember at that point also when the exchange rate was getting close to 2,000, people began to give forecasts that, oh, when it gets to 2,000, the next will be 3,000, then 5,000. Where were the people so specific about those figures? Why didn't they say, oh, when it gets to 2,000, the next will be maybe 2,759? Those are not round numbers. So the forecast was, okay, when it gets to 2,000, probably it will get to 3,000, 5,000. Why? Because these are all numbers. And price reacts at these all numbers. And that can be an advantage to a trader because you can use that information, to your advantage in forex trading. So this is an example on the screen you can see now. This is a currency pair New Zealand JPY on a 4-hour time frame. And if you see what's on the screen now, price got to this psychological level, 88.000. And what happened? There was a reversal. When price hit the psychological level, automatically there was reversal in the market. And a trader could take advantage of this to milk the market on some very decent profit due to the reversal that took place. Identifying psychological levels. How do we identify psychological levels? One, the most common psychological levels are round numbers. Traders often place buy or sell orders at these levels, leading to increased trading activity. Now, this is the primary way to identify psychological level. From the word psychological, literally it means it has to do with the mind. Psychology, it's always about the mind. And the easiest one is round numbers. But then there are some other ways we can also identify psychological levels. Though in the class today, the emphasis is going to be more on the round numbers. But it's good you also have an idea of some other ways to identify psychological levels. So the next way to identify psychological level is using previous high and previous lows. So when you talk about previous high and previous low, price points, these are price points that previously acted as significant high or low, and they can become psychological levels when revisited. I'll use Nigeria exchange rate as example again. Since price goes to 2,000 naira per dollar 2 years ago, it has not been back there again. But you know what? Whenever price gets to that level again, if it ever happens, there is bound to be a reaction because that is a previous high. So you can use a previous high and low as psychological level. Also, you can use Fibonacci retracement levels. Some traders use Fibonacci retracement levels such as 50% Fibonacci level, 61.8% levels as psychological level. Now, if you have followed my teachings or followed my analysis, you discover that Fibonacci 50 and 61.8 are key levels I personally use in my trading style. And mostly I use them as take profit levels. Why? Because they are psychological level. Usually retracement or reversal occur at these Fibonacci levels. It has been proven times and times without number in trading that price will either retrace or reverse. Generally, there will be a reaction anytime price gets to Fibonacci 50 or 61.8. So they can also be used as psychological level. Now, moving average is another tool that can be used to identify psychological level. So we say that exponential moving averages like the 50 period or 200 period can serve as psychological level as well. So in other words, if price crosses, or let me say price hits a moving average 200, in an uptrend, it's possible for price to reverse. Same thing also the moving average 50. So they can also be used to identify psychological levels. So what are the pros and cons of psychological levels? The pro, that's the advantage. One is high liquidity. Psychological levels tend to attract a large number of traders, leading to increased liquidity and tighter spread. Now, if you have not known about this before, you are getting to know about psychological level today, and I want to believe from today, you want to start paying attention to it. Now, same way, there are many other traders that keep getting to know these things, and this increases the number of people trading with these levels, thereby increasing the level of liquidity and activity anytime price gets to these particular levels on the chart. Second pro is clear decision points. These levels provide clear points for traders to make buy or sell decisions, leading to potential price reaction. So let's say again, price approaches 2,000 naira per dollar exchange rate in Nigeria. You know what to do. You know that level could act. It's actually a psychological level, which will even be used as a resistance level, where you know that, okay, if it hit that level again, firstly, there's a possibility of some retracement or a reversal, even if any other thing is going to happen. So that gives you a clear decision to make as a trader that, okay, when price approaches this level, this is the reaction I anticipate could happen in the market. Thirdly, we have psychological impact. Human psychology often leads traders to place orders at these levels, reinforcing their significance. So what some people do is they just go ahead and place pending orders at these levels so that whenever price gets there, they believe, if you have price approaching a Fibonacci, sorry, a psychological level, let's say you're at 1.100, you're expecting it to get to 1.200 and like that, then you know that psychological level will act as a resistance. So you put a sell stop order. Sorry, you put a sell limit order, pardon me. You put a sell limit order around that area, anticipating that when price gets there, there should be some slight reversal for you to enter into profit. So there's that psychological impact in people's mind. They know the expectation they are to see around that price level. So they prepare to it by placing pending orders. So a lot of people place pending orders at those levels, while they anticipate the next move of price in the market. So what are the cons? What are the disadvantages of these levels? The first is overcrowding. And this is due to high concentration of orders at psychological levels, which can sometimes lead to overcrowding and erratic price movement. So usually there's bound to be instability in price movement around psychological level. Price, you just see price not being stable, being erratic in movement around this level because a lot of traders are trying to concentrate their orders. Many are placing, imagine if one person is placing like 3-5 trades and there are thousands of people doing the same at a particular level. There's bound to be some erratic movement of price around that region. So overcrowding is one disadvantage of psychological level. And secondly is false breakout. Price can temporarily breach these levels and that can trigger stop loss orders before reversing direction. And this can result in false breakout. So another thing that is a negative on this psychological level is that it's possible to have false breakout. Price may hit that level, you think it's going to reverse, but it keeps going up, in the other direction, and that can trigger your stop loss orders, and you may end up losing the trade. It's possible that can also happen. Now, using psychological level as support and resistance. Now, if you've attended our training, one of the key concepts we emphasize on a lot is support and resistance, because it's basic and foundational in trading. However, there are some times you don't get to see support and resistance on the chart. But then in such instances, psychological level could actually act as either support or resistance, depending on the circumstance, you find yourself at that point in time. So using psychological level as support and resistance. Support levels. When a psychological level acts as support, it means that the price tends to bounce off that level when falling. Traders can place buy orders near these levels with stop losses below, anticipating a rebound. So you can use a psychological level as a support when price is dropping low, and you can't find any other valid support. If there is a psychological level around that region, that can act as support. And the same thing also at resistance levels, it can act as resistance. And thirdly, you can use psychological level for confirmation. It is essential to confirm the significance of psychological levels with other technical indicators such as trend lines, candlestick patterns, or oscillators to increase the accuracy of your trading decision. Now, this is very important. I always say it, never use just one indicator or one tool to place a trade in Forex trading. One indicator or one tool or one principle is not enough. You need a confluence, multiple sources telling you whether it's right or not to buy or sell. So in as much as psychological level is very important, we are not saying you should use it as a stand-alone tool. Use it in combination with other technical tools like trend lines, candlestick patterns, oscillators like stochastics or RSI, so that you can increase the level of accuracy of that level, which is the psychological level. So for example, now if price is approaching the psychological level, which could act as a resistance, don't just place a sell trade. Look for possibly a candlestick pattern. Maybe you can see a shooting star or a bearish engulfing candlestick pattern. That can be a confirmation to you that yes, you can take a sell trade. Or possibly you can look at for an oscillator like stochastics already at maybe 80 or above 80. All this can point you into a clearer, give you a clearer picture of what is happening, to help your decision-making process. So here's an example of a psychological level acting as support and resistance. And the currency pair here is the Euro card on the weekly time frame. So you can see the psychological level here is 1.50000, and the psychological level acted perfectly as a resistance. It acted as a resistance, and here you can see price dropped, and at the lower part you can see the psychological level as 1.30000, which acted as a support. So you can look through your chart and plot these levels, and you will see in some instances, even in history in the past, when you backtest, you'll see that they actually have acted as a support or resistance in the past. So you can still use that information in the present time, to identify support or resistance levels. Improving trading results with psychological levels. One is a risk management. Use psychological levels to set stop loss and take profit levels. This helps manage risk and maintain discipline. So you can use psychological level, to set your stop loss. So this can help you to manage your risk and maintain discipline. So let's say you have the psychological level plotted on your chart, and you can see you've taken the trade in the bullish direction, price just bounced off that psychological level. Then that means a little from some few pips, 5 pips below that psychological level could act as your stop loss. in order to protect your account and to maintain discipline. Second is price action analysis. Pay close attention to how price behaves around psychological level. Look for signs of reversal or continuation patterns to make informed trading decision. This is very, very important. And number three, combine with other strategies. I just emphasized that some minutes ago. Integrating psychological levels with other trading strategies, such as trend analysis or Fibonacci retracement, can enhance their effectiveness. So don't always use it as a standalone tool. Always combine, with other technical tools for more effectiveness. And finally, stay informed. Keep track of economic events and news releases that can influence market sentiment around psychological levels. This is very, very important. Regardless of how powerful this tool is, always make sure you check your forex factory to know if there's an upcoming news event so that you can better strategize and plan ahead. Don't just use it randomly without knowing what the fundamental is saying. Always check your fundamentals so that it can be properly guided. Now, here's a chart. Chart showing us how to combine psychological level and chart pattern to get more accuracy in our trading. So this is USD on the weekly time frame. And the psychological level here is 1.00000. And at that point, we discover that it acted as a valid resistance level. Not only that, around this region, a chart pattern, which is a double top pattern, was formed on USD and you can see price actually went in line with the psychological level acting as a resistance. Now we have a double top and price kept dropping on and on and on in the direction of the market trend. So chart pattern can be a confirmation. If you find it around psychological level, it can help point you in the right direction of the market. Here also we can see psychological level being used as a resistance turned support. Now the psychological level here is 1.70000 and the currency pair is the Euro New Zealand. Now here is the psychological level acting as a resistance here. Price broke out above it, retraced, went up again. Now it became a support. This is resistance on support. Price returned again as a support, and from there, you can see price breaking up in the bullish direction. So psychological level can act as a resistance, turn support, where price can go up more in the bullish direction. And psychological level can also be used to trade trend line breakout, where in this instance, it's acting as a valid support level. Now, for this currency pair, which is GBP AUD, you can see the psychological level at 1.90000, and that psychological level acted as a valid support. Then we have the trend line. Price broke out above the trend line, retested the trend line, and then continue going further. So that support actually gave us a confirmation, that price will break out into the upside direction after breaking out above the trend line also. So here we see psychological level helping us to achieve this. And finally, I think here we have psychological level being used in combination with the Fibonacci tool. In this example, we can see psychological level at 1.61000. And the Fibonacci tool was applied to this chart. And we can see that price broke out above the psychological level, retested the psychological level as a support, and then we had a breakout, into the upside direction. So here, the psychological level helped to track price movement as it broke out from, as it retested the previous support level, which coincidentally is the same as Fibonacci 61.8. So you can use the psychological level in combination with the Fibonacci tool to get even clearer trades. And some people have even built a whole lot of strategy just around this simple principle, psychological level in combination with the Fibonacci tool. All right, that'll be all on this session today. We've been looking at psychological level. If you have any question on what we've taught so far, you can go ahead and post it in the comment section, or you can unmute your mic and ask, and I'm right here to answer your question. And if you happen to live around Lagos and Abuja, don't forget tomorrow we have our physical training sessions. But tomorrow is Thursday, so we have physical training at both the Abuja and Lagos office. The address of the Abuja office is 50 Ebitu Okiwe Street, Jabi, Abuja, and the time for the training is 11 a.m. Now, Lagos office training is 11 a.m. and the address is Lagos Executive Business Lounge at 54B at Adeniyi Jones Avenue, Ikeja, Lagos. Also, the 5X program is on, where we drop specialized signals that can help grow your account to 5X within the next 1 month. I will encourage you to speak with your account manager on how to get started with this 5X program. People are making profit already, so don't be left out. Don't be left out. Go ahead, reach out to your account manager, put in the right funding and start enjoying these amazing signals from PU Prime. Now, this is completely different from the other signal group. It's a new initiative with a better result and a better performance than the other one. Okay, so Stanley is asking, using it with RSI. Sure, you can use it with RSI. It depends on how you want to use it. For example, let's say your psychological level, price is your psychological level, and you want it to coincide with probably, as in if your psychological level is acting as a resistance, for instance, and you want it to, at a resistance, you're looking for opportunities to sell, then the combination we now need is your RSI at 70. So if price is psychological level above, where you're looking for opportunity to sell, if you now see your RSI at 70 or above 70, for this RSI, 70 and above 70 is the overbought level. When price gets to that 70 and above, you expect a reversal downwards. So that would be a confirmation that, okay, price is psychological level above, I'm expecting a sell, and my RSI is also already overbought, where I'm also expecting a reversal. So that's how to combine it, both the psychological level and RSI. And if it's stochastics you want to use, then it will be that stochastics is already at 80 and above 80. That's if your psychological level is above. So that's how to combine it. I hope I answered Stanley's question. Okay, Big Jacks is asking, how long can one wait before a psychological level plays out? There's no, that's not for me to determine. All you need to do is to just go ahead and identify a psychological level on your chart. You may go to some online and search for possibly some psychological level indicators on Forex Factory or other sites and install on your chart so that you don't need to start doing it manually all the time. If it works for you, you can go ahead and do that. So how long it takes, it depends on the market. That's not what I can decide. It's not what I can decide. Just look at the one that is closest to the price, on your chart. That's the best I can advise on that. You're welcome, Big Jacks. Any other person with a question? Don't forget, don't always use it as a standalone indicator. Always combine it with other indicators or other tools to give you a better result. Either an oscillator like RSI or stochastics or candlestick pattern or chart pattern, those can actually give it more a higher level of accuracy that can deliver better results to you. All right. I don't think we have. Yeah, good afternoon,
Hello,
sir. Yes, I can hear you.
All these instruments we
Yes, sir.
find, personally, I find it very hard to use. So in order to combine the instrument, like moving average, all those things. all those lines, how to draw it. So I find it difficult. So how can you assist? Or is there any way we can do that so that we would know how to handle all those things better?
Okay, first thing is this. You don't need to use too many indicators. You only need to use the ones that works for you. So if, let's say, for example, you want to use psychological level, for instance, like I've mentioned earlier, if you want to use the RSI, perfect, and if it's stochastics you want to use, you don't need to use too many things. Two or three is enough. If moving average is complex for you to use, drop it. Use the one you can easily manage and you will just be fine. Then the other side is this. Are you trading? If you're trading on your laptop, like I said earlier, if you want to use the psychological level, then to make it easier, you might need to install a third-party indicator to do that for you. Otherwise, you can still do it by yourself, but you need to manually identify a round number, maybe a 1.000, 1.5000, 2.500, and the rest like that. You may need to manually identify it all by yourself. For me, the best way I use it is if I look around on my chart, I can't find any resistance or support, then I just easily go ahead and look out for the psychological level. So that replaces my resistance or support at that point in time. So how
Oh,
that
my question in essence is this. We are using phone. So there are some certain instruments which
okay.
we can use, but we don't know how to handle the instruments to use it, like drawing of line, all those kind of things. So is there any physical mentor that can, assist someone in understanding how to place all those things?
Sure, you can come over to our office, we can guide you. We have training 2 days in a week, Tuesdays and Thursdays. We can guide you to do
Okay,
that.
okay,
Where are you
okay.
based, sir?
I'm living in Lagos.
Fine. We have training tomorrow. Come to the Lagos office tomorrow.
Okay, no,
Yes, sir.
no problem.
Do you know the
Okay,
address?
I know the place.
Okay, fine.
I know the place. Adeniji Jones.
Yes, time is 11 a.m.
No problem, sir.
You're welcome.
Okay,
Yes, sir.
thanks.
You're welcome. All right. I think that's the last question. Or do we have someone that wants to ask a question as we close? All right. In the absence of any other question, come to the end of this webinar. The link will be dropped in your WhatsApp group. I will encourage you to go ahead and click the link when we drop it so that you can watch it over again to get a better understanding of how this works and so that you can, adopt it as one of the strategies you're going to be using to trade the market going forward. All right. We'll see you again some other time. Take care and bye-bye. Yes, we have this insightful session every Wednesday, sir. That's for Biggie Sachs. You're asking, are we going to have more of this insightful session? Yes, we will. Just always watch out in your group. Drop the link so that you can come up online and learn a new thing every week. You're welcome, Ochong. That gladdens your heart. Don't worry, Pure Prime got you anytime, any day. All right, bye-bye.